Welcome to all the participants for our masterclass today. The topic for our today's masterclass is Top Technology Trend in 2021, Hyperautomation of Accounts Receivables Operations. And let me now welcome our masterclass speaker, 𝗧𝗧𝗽 𝗧𝗲𝗧𝗃. John, thank you very much for being with us. And as we get started with the session, we'd like to request all of you to please be unmuted. And if you do have any questions, post your questions in the chat window at the bottom of the WebEx. And we look forward to take your questions as and when they come in. John, I would now like to welcome you to get started with our session today.
Thank you, Akshay. And I'm excited about today's webinar. Got a nice topic, I think a very interesting one. And I think I was able to connect some dots that hopefully will increase your understanding of what's happening in technology that can affect the accounts receivable process. So we'll have a quick introduction, and I'll talk about something I call productivity hierarchy. And we'll talk about where hyperautomation fits on that, define hyperautomation, and then describe how it helps four specific sub-processes within order to cash: credit collections, cash app, and deductions. Share with you two customer success stories today. They're both remarkable in their own way. Wrap it up with a conclusion, and then answer any questions you have. All right, so if we look at this, I mean, this webinar is all about productivity. Nothing new about that. That's been an objective for just about every department in every organization for decades. And it really doesn't matter much what you did last year. Every new year, the targets are refreshed and there's new productivity to be gained each and every year. And certainly over the years, many approaches, philosophies, technologies have been used. I'll recap a couple of those for you here shortly. But really the last year or two, several have emerged that I think have the potential to be maybe the most promising in terms of increasing productivity. And these are three you've probably heard of. You've probably at least heard the acronyms: Intelligent Document Processing, IDP, Robotic Process Automation, RPA, and of course, Artificial Intelligence, AI. And we'll look at how those specifically impact accounts receivable operations. But let's just take a look back. Some of you haven't been around in your career that long. As I said, the quest for productivity has been never-ending and long-standing. And going all the way back to the 80s, the very popular technique was called total quality management, TQM, and it was based on the teachings and learnings of a gentleman named W. Edwards Deming, who was credited with helping the Japanese economy recover and become very efficient and very powerful after World War II. And coming out of that then were techniques you've probably heard of: lean re-engineering, and Six Sigma methodologies. And a decade later, we got the term process re-engineering. There was a high-selling book called Re-Engineering the Corporation by James Champy in 1993. And then other technologies and techniques came into widespread use: EDI, electronic data interchange, OCR, optical character recognition, also known as scanning. The ERPs, enterprise resource planning software systems, came into prominence in the 90s, led by SAP and Oracle, to a lesser degree PeopleSoft. And then some of these macros were coming into use to accelerate progress on clerical functions. And then in the 2000s, it really started to take off. You know, the widespread adoption of the internet was really the fundamental driver of tremendous productivity. and the way information could be transferred quickly in whatever detail required. And then there was also, I think, a great emergence of what I call best of breed bolt-ons, particularly in the AR function, where companies would find that the functionality for managing receivables in SAP and Oracle was okay, but not great. Well, companies jumped in to fill the void. I call them best of breed bolt-ons. Then the portals really started emerging, the vendor portals and the customer portals. So rather than having to call or email a vendor or a customer to get information, you can just go to their portals and get it yourself. Big productivity enhancer. I think a greater utilization and recognition of the value of advanced metrics and analytics to really identify and quantify the root cause of inefficiencies. A lot of attention spent on improving the auto cache algorithms, which drove auto cache hit rates much higher. I mean, that's almost the definition of productivity right there. You're automatically applying 70% of your remittances versus 100% manual. Well, that's a 70% improvement. Huge. And then recently in the last years, the whole arena of digital commerce, particularly with respect to invoicing and payments, has opened a new world in terms of speed and productivity. But today we're going to talk about the three I mentioned, IDP, RPA, and AI-powered digital assistants, but also note that FinTech, with all the different payment options and mediums now, also has some high potential. Let's talk about what I call the productivity hierarchy. And this is just a ranking, if you will, of various productivity techniques. And I break it down into three categories: incremental, which can deliver, single digit, low, double digit productivity; advanced, which has the potential of delivering 20, 30, maybe even 40%; and then exponential, which can deliver above 40%, over 50% productivity. And basically a synonym for this is touchless. A touchless operation. The name implies no manual involvement. And the incremental are some of the ones I mentioned earlier, the process redesign, and then not only adopting tools like EDI and ERPs and vendor portals, but really optimizing them, putting them to full use, getting the most out of them. Advanced techniques, a range of things, the best of breed bolt-ons, the portals, particularly the customer self-serve portals. So instead of a customer calling or emailing somebody on your staff that has to take the time to answer, which is not a very customer service remark, I understand that, but now the customers can go to your portals and get a lot of the information they need, and they can do it 24/7 and probably faster than calling. So, that's a big productivity enhancement, but also things like policy changes. And I'll just cite one example. Perhaps the largest volume cause of deductions or short payments, chargebacks, is shortage and damages. Customer didn't receive the amount of product that the invoice states, or some of it was damaged. So customer takes a deduction, and it's usually not a lot of money, but it's still a transaction that has to be dealt with. Well, what some forward-thinking companies have done is they've gone to their customers and they said, we looked at the last 2 years of data and we found that we issued credits for damages and shortages equivalent to 0.4% of sales across 8,500 deductions. So how about this year? We give you a blanket 0.4% discount off every invoice, and in return, you don't take any of these damage and shortage deductions. So, a policy change like that can have a significant impact on reducing transactions. So there's a lot of things, there's several things in this advanced category, including what I call remediation of large account behavior. I think you probably understand what I mean by that. You know, a customer who just demands a disproportionate amount of your time because they need customized processing, or everything's a problem. And then the exponential sources of productivity hierarchy, the ones we're going to talk about today: IDP, RPA, and the digital assistants. All right, so use the phrase hyper automation. What is it? Well, it's automatic versus manual processing of as much as 70 to 90% of the transactions within an operation. Typically, these operations that are best for hyper automation, high volume, manual, and provide the opportunity for a huge increase. In addition to just processing improvements, with increased accuracy, the rework is reduced. All right, here's a schematic. Might be a little hard to read everything, but basically on the left, you've got the sources of financial documents: customers, banks, credit bureaus, etc. And what do they send into your order to cash AR operation? Well, all sorts of unstructured documents. And it comes from vendor portals, EIPP portals, comes in Excel, PDF, TIFF files, GIF files, emailed, faxed, hard copy. Comes from lockboxes, different transmission formats like EDI 820, bank statements, credit applications, customer orders, remit advice, explanation of deductions. All this stuff, all these documents with financial data are coming in. Different formats, different modes, unstructured data. So the first step in bringing order to this and driving productivity is intelligent document processing, IDP. And basically IDP does two things. One, it extracts the required data from all these sources. It extracts all the data that's needed to process the document, and only the data that's needed. So for example, vendor sends an invoice and gives you all the information for what they're charging you for, and IDP will extract that information. And at the top has a big banner that says, "Join us in celebrating our 100th anniversary." Well, nice, but IDP doesn't bother with that. So it extracts the required information, but only the required information. And then it converts it from this unstructured mass into structured data, usually in a CSV file, but other file formats as well. So here, if you've got human beings doing that now, reading, interpreting these documents, extracting the required information, and putting it into some sort of format, if that's all being done manually, here's an opportunity for as much as 90% automation, 90%. So once that's done, once you've got your structured data file, it can run through RPA, which has been around a few years, accepts the data, and conducts basic processing, usually within your ERP. And I like to think of it as RPA emulates the human interaction with an ERP system, meaning inputs the data and then triggers the processing. And of course, RPA works best with simpler, repetitive, high volume operations. And then the next step up is the AI digital assistants, which is a higher level of automation and can handle the more complex, more varied, less predictable tasks that RPA cannot. And artificial intelligence AI-powered digital assistants can do things like retrieve credit information from Dun & Bradstreet or Experian, can actually compute a credit score and a credit limit for human review. It can send out collection emails, and not just the old-fashioned done letters or done emails, but actually with a dialogue. Can you pay this invoice? No. Can you pay it tomorrow? Really has increased the hit rates on AutoCash, can execute the small balance write-offs, and it can route deductions, things like that. So these technologies, here again, if you look at a 100% manual operation performing these functions, here again, these two technologies, RPA and AI digital assistants, can automate 70, 80, 90% of that tasks, and then pass it downstream for further processing, whether it's just approval, whether it's no more processing, whatever. But this does the heavy lifting within your finance department. All right, just quickly, I've kind of explained already. IDP extracts and converts unstructured data into structured data. And it utilizes, in various degrees, these familiar technologies, AI, something called machine learning, natural language processing, which you've probably heard of. It extracts this data from these documents, and then those documents are gone, stored. And it's certainly a lot faster and cheaper than having human beings do it. And what's nice is it also works with multiple languages and currencies, which is a big thing, particularly if you're in a regional or global shared service organization. RPA utilizes software robots, typically known as bots. And these bots learn and then execute rule-based business processes. So it's a little more structured, rule-based business processes. But here again, they emulate human interaction with digital tools, ERPs, things like that, meaning input and processing. Here again, utilizes to some degree machine learning, natural language processing, and the beauty of it, it operates 24/7, 365, and is faster and more accurate than human beings. The digital assistants are probably the most interesting, exciting development. They basically assist your workforce. They can provide information, engage and assist customers, and again, 24/7, as well as perform repetitive tasks. And here again, utilizes some familiar technologies, but I think a little more with the AI, the cognitive self-learning and tools called deep learning neural networks, as well as the others that we've mentioned earlier, natural language processing. But one of the big things, big advantages of these AI digital assistants is they integrate with ERPs very well. And that's a big help, because remember, your ERP is the way you fulfill orders, and its financial module is the single source of the truth when it comes to compiling results and reporting. So, 3 technologies. Sure, you've heard of most of them, or if not all of them, but maybe a little deeper dive there to understand how they work and how they save manual labor. And let's look how they assist specific AR or order-to-cash task collections. Well, we've all done letters, done emails, send them out. We know a lot of them never get looked at, just get ignored. But it's better than nothing. And typically these letters are sent out to those segments of your portfolio that you're pretty sure you're not going to have time, or your team is not going to have time to individually contact. So some contact is better than no contact. Well, The AI digital assistants take it a step further because they can actually participate in a dialogue of sorts. You know, we see you've got 3 invoices worth $22,000 that are significantly past due. Can we expect payment today? That's the email that goes out. Customer ignores or responds back, no. Well, that's not the end of the game, because now the AI digital assistant says, well, okay, can you pay tomorrow? No. Can you pay by the end of the week? Yes. Okay, so then the digital assistant logs a promise to pay in your collection system. And then do you need help paying by ACH or credit or debit card or whatever? And if the customer says yes, the digital assistant will guide them through it. Go to this portal. This is how you make a payment. So it's a big step beyond the old done letter. And, you know, some customers can only say no so many times, you know. I mean, there'll be an element of customers who just ignore it. But this can change the behavior and accelerate payments from a significant percentage of the customers who receive them. And best case, if they're customers who are smaller and would never receive a communication, you got a big leg up. Cash application. You know, we've talked about this in earlier webinars too, but basically the IDP extracts the remit data and then it's run through the AutoCash engine, and we're seeing 85 to 95% hit rates. So when you start talking about productivity and saving manual effort, well, 90% hit rate will do it. And digital assistants can also create the deductions, route them for resolution, execute the small balance write-offs. Deductions, short pays, chargebacks. The digital assistant can automatically create the deduction and route it for resolution based on the customer, the type, whatever. And of course, attach and include all the available information to enable that resolver to research and resolve it quickly. Because remember, in the deductions process, once the deduction is identified, you're routing it to somebody and you're asking them to determine if that deduction is valid or invalid. Well, least you can do is give them the information they need to do that research. And that's essentially what the digital assistant does, which brings significant acceleration to the research and resolution. And it will do internal dunning as well. So if you say, all right, all you recipients, resolvers out there, you've got 5 work days to respond to this deduction reserve. Well, the digital assistant can start dunning those people on day 6. What are the benefits? Well, I think I've been mentioning them as we go. Dramatically increased employee productivity when compared to a manual operation. If it's semi-manual, you'll still get big improvements. And a nice increase in morale because you're eliminating the grunt work. And people are able to do more challenging work on solving problems, better serving customers. You know, with the dunning, the automatic interactive dunning, start to bring that AR in better shape, lower DSO, faster response to customers because the internal processes move faster, and increased accuracy and quality of the operations. So these are all big benefits. Ultimately, they do all the things you want to do. Improve the customer experience, reduce cost, improve cash flow, which ultimately is going to lead to better profits and cash flow. Real quick here, a couple quick customer success stories. This one was a global medical product supplier. Pretty complex situation, operating in over 30 countries, multiple languages. Their ERP was SAP. And they used several of the 𝗧� AI-powered digital assistants for some of the functions we just talked about. And what was the value here? Well, the resolution cycle time for deductions reduced to 5 days. That's good. I mean, that's pretty quick. And that's upper quartile performance, if not better. Auto cash hit rate went from 50 to 80%. So that's 30% of customer payments that people didn't have to apply anymore. And if it's, it's a pretty high volume operation, that's a huge improvement. And the DSO actually went down from the ability to regularly contact all your customers. And this case study here is focused a little bit more on the credit vetting and approval process. Building materials company that was experiencing fast growth. They didn't want to lose customers because of their slow credit vetting and approval. Remember, when a company is shopping for a new supplier, they're looking for probably 2, maybe 3, but they don't want 8 suppliers. So if you're slow to respond and they line up 1 or 2 suppliers while you're still fooling around with your credit documents and stuff, you're losing customers. So using digital assistance for the whole credit vetting process, verifying data, importing data, calculating credit limits. Result was about automation of about 80% of that credit vetting process, and the turnaround time reduced from 14 days down to 4. Oh, that's pretty fast. So what's our conclusion today? Hyperautomation is being used by many companies today, not a system of the future concept here. It's up and running. Again, for manual processes, completely manual processes, it can increase productivity by 70 to 90%, enable faster response to customers, and improve the accuracy. Questions?
Thank you very much, John. We do have just a few minutes left over, so I'd like to just request all the participants to post in any questions that you might have in the chat window. We'll get back to those questions in an orderly fashion. We have the first question here. The question is, what are the new technologies that can dramatically accelerate productivity in AR operations?
Well, the new ones, we looked at 3 decades of productivity improvement tools and techniques. But the newest ones to emerge in the last couple of years are the intelligent document processing, the RPA, and the AI-powered digital assistants.
Thank you, John. The next question is, why is intelligent document processing considered a feeder operation?
Well, it converts unstructured, chaotic documents and data into a structured data file, which then makes the next steps in processing much, much easier. In fact, RPA requires it. RPA can't work with unstructured data. RPA needs structured data. So IDP sets it up for them. And then you're in a position to gain the benefits and the productivity improvements that RPA can bring and that a AI digital assistant can deliver.
Right. And John, what do you think in addition to increasing the productivity, what are the other benefits that one could think of the AI digital assistants?
Well, I think probably the primary one is faster response to customers. I cited the example in our second case study of the company looking to accelerate their entire credit vetting purpose so they can get back to a customer quickly and say, yeah, we'll extend your credit. Welcome aboard. Love to do business with you. Or, sorry, we're going to need some money up front. But at least there's an answer and there's a dialogue with the customer. If it's if a credit approval is delayed a week, 2 weeks, some of those customers are just going to go somewhere else. So I think the speed in response to customers is probably the biggest other benefit other than productivity.
Yeah, thank you, John. So I know we are on the top of the hour, but one last question that just came in. Does this read the payment advice from inbox into the collection accounting?
Yes, Yes, I mean that's one of the big benefits. Because remember, those remittance advice documents come in all sorts of different formats, different structures, and with machine learning, it actually learns how to read the Walmart remit advice versus the Target remit advice, knows where that information is that it needs to extract. So that's a big, reading remit advices and taking that data, putting it in a structured file, sets it up for auto cache and helps drive those auto hit rates much higher.
Thank you, John. One more question just came in. I don't know. We are already on top of the hour over here. Yeah, let's still go with it. Okay. What happens when the internal department does not respond to the digital assistant query?
Well, that's part of the process that has to be set up. And I think this is in reduction to resolving disputes and deductions. It's a policy the company has to set to say, this is how we want to treat our customers. They got a problem. We don't want them to wait 2-3 weeks to get an answer. We want to reply quickly. It's just enforcement of a, kind of a performance standard that is set in the way the company wants to treat and respond to customers.
Yeah, I think we are through with the questions, John. Thank you very much for spending a couple of more extra minutes with us. And thank you very much, all the participants, for staying out there. And we really feel happy to have a very active participations. Just wanted to also let you know that in case if you do still have any questions, you could send an email to us at info@𝗧𝗧𝗪.com. And I would also like to take this opportunity to invite you all to our next masterclass session, which is on Thursday, the 26th of August at 10 a.m. Pacific time. And the topic for our next session is B2B credit management in the new normal. So we look forward to seeing you all out there. Thank you very much, John. And thank you, all of you.
Thanks, everyone. So long. See you in 2 weeks.
Sure, John. Yep. Thank you.